Rebel with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team, which manages model portfolio. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Here is a Nifty's daily chart taken from our website. It is very important to understand Nifty's price volume action to gauge the market how it is present in the current moment and also have a view on the market going forward as well. About a month back, Nifty scaled a new all-time high around 26,200 levels in the month of September, and it was followed by sharp selling. And in the process, Nifty started to breach its key moving averages. 21 DMA was first breached, then 50 DMA acted as a little support for the index, but that was not enough for the index to hold, and that was followed by 100 DMA breach as well. Currently, it is not able to reclaim its 100 DMA. Still, index is trading below its 100 DMA. Historically, 100 DMA has acted as a very good support for the index. So, going forward as well, Nifty reclaiming 100 DMA is a very crucial point going forward. Coming to the market status, yesterday we have changed the market status to rally attempt following the O'Neill's rule. Previously, we were in we were in correction. That is, we were in downtrend, but that low was held for three consecutive trading sessions. Hence, we changed the market status to rally attempt. This means that the market is attempting a rally from here, but it is still not in a rally mode. That the rally mode will come when market or the index gives us a follow through session. That is an indication that the fresh selling is coming fresh buying is coming into the markets. Coming to the model portfolio, as the market is in correction mode, we stopped adding stock to model portfolio, and we looked out for stocks which are in laggards or which are not performing well, and we exited them from the portfolio. Fresh additions are not advised at this moment because of the overall weakness in the market. Market should improve from here to take fresh positions. That is, if the follow through session happens on the index, that is an indication that we need to start preparing our buy watch list and adding stocks to the portfolio. Rally attempt is a phase where you need to build your buy watch list of stocks which are looking good and which can be considered for fresh additions as soon as the market improves from here. Coming to the key news section, the companies have been reporting their numbers for the September quarter. Lupin has reported their numbers yesterday. Revenue for the quarter was up 12.6% to 5,600 crores of rupees. Profit on the other side was more increased more than 74% to 852 crores of rupees. Indian hotels have also seen similar numbers. Revenue growth was 27%, whereas profit growth was more than 225%. EBITDA margin has expanded 270 basis points to 27.4%. Overall, very good set of numbers by these two companies. And let's look into other few companies which have reported their numbers. Rail Vikas Nigam has come up with the numbers. The revenue for the quarter was down 1.2% to 4,800 crores of rupees. Profit on the other side was down more than 27% to 287 crores of rupees. EBITDA margin has also seen a contraction of 40 basis points to 5.6%. IRCON International has also come up with the numbers. Revenue was down more than 19% to 400 crores of rupees. Profit on the other side was down more than 17%, almost 18% to 206 crores of rupees. In the today's session, we are looking at stocks such as Asian Paints, Aravindo Pharma, Auto Divis Laboratories, Healthcare Global Enterprises, Utkarsh Small Finance Bank, TVS Electronics reporting their numbers. Apart from these, there are other small and mid cap companies reporting their numbers. These are the slightly large market cap companies which are mentioned here. There are other stocks from the mid and small cap spaces also reporting their numbers. If you have any of these stocks in the model in your portfolio, personal portfolio, you can monitor those positions during the market hours because we might see volatile action because the companies have reported their numbers. Coming to the global market update, US market closed at all-time highs after Donald Trump winning elections. Yesterday, Dow Jones closed flat. S&P and Nasdaq continued their upward momentum. S&P closed 0.7% higher, whereas Nasdaq closed 1.5% higher. Asian markets are also trading in the positive territory as we speak. Three major indices, Shanghai, Nikkei, and Kospi, are trading in the positive territory as we speak. GIFT Nifty is indicating a muted opening around 100-point higher opening on the Nifty index. So going by the global cues which are on the positive side and GIFT Nifty, we might see muted to positive opening on the Nifty index. But Nifty reclaiming 100 EMA is a very crucial level. Until then, we might see Nifty trading in a very narrow range. For the chart of the day, we picked CDSL, which has been a very good stock despite the overall market is in a weak mode. This stock continues to stay resilient and it has been one of the leading outperformer in the last 1 month or so. That is being reflected in the RS line as well. RS line has been hitting blue dots consistently. That is a significant action on the technical front. Fundamentally, the stock has been a very solid stock. The growth story is very intact regarding the depository accounts and being a market leader in the depository segment. And demand penetration has been low still compared to the global peers. These are the few major growth pillars for the company, and those pillars are going to stay strong going forward as well. So, fundamentally, there is no doubt about the company's growth prospects. Only we need to look at is a technical point where we can take a fresh entry. That is been very close at the current market price as well. Currently, it is 4% below pivot and 1640 has been acting as a slight resistance. A couple of times it faced resistance at that level. So reclaiming that level is very crucial on higher volumes to take fresh positions. But as the market is in still not a strong mode and Nifty trading below key moving averages is not a sign of positiveness. So you can give it a some time. Let's look into how the market improves from here and before taking a call whether to invest in it or not. Thank you for joining today's pre-bill. Have a good trading session.